Welcome back to The Explainer, everyone. I'm your host, Sameh Harekli. Now, if you've been following our content, you know we're absolutely obsessed with internal auditing, governance, risk management, and internal controls. Well, today, we're doing a complete deep dive into the Day 31 payroll audit. We're going to meticulously break down every single element of this crucial audit process, so grab your notes and get ready for some highly focused learning. All right, let's just jump straight into this. We've got our comprehensive visual syllabus perfectly mapped out. At its core, a payroll audit evaluates if employee payments, deductions, and benefits are accurate, authorized, and completely compliant with laws and policies. That is the precise, fundamental mandate we are exploring today. To achieve that mandate, we're looking at a quick 6-part agenda. 1. Objectives and key risks. 2. Controls and process example. 3. Audit procedures and focus. 4. Example payroll transaction. 5. Red flags and impact. And finally, 6. The key takeaway. Let's get going. Section 1. Objectives and key risks. Objectives. An auditor's goals here are incredibly strict. We aren't just making sure employees are paid accurately and on time. We're also verifying proper authorization and demanding rock-solid records. More importantly, ensuring absolute compliance with policies and labor laws actively protects the company from massive, crippling financial fines from regulators, all while safeguarding highly sensitive payroll data. 2. Key risks. So what actually threatens those objectives? Well, a multitude of risks. You've got blatant fraud, like ghost employees, where, say, a corrupt manager creates a totally fictitious worker just to siphon off a salary. Then you have duplicate payments. But you also have systemic failures, unauthorized employees or pay rates, improper deductions, incorrect overtime, and inaccurate leave balances. And on the back end, inadequate segregation of duties and weak access controls to the payroll system can literally hemorrhage money from an organization. Section 2. Controls and process example. 3 key controls. To defend against all those threats, we need strong controls. It all starts with proper hiring approvals and, this is a big one, restricted master data access. This literally stops rogue employees from just logging in and giving themselves an unauthorized salary bump. We also rely heavily on automated system calculations for pay and taxes, strict reconciliations of the output, and making sure we have timely tax deposits before any final payroll review is completed. 4. Payroll process example. Let's trace how this flows in a standard payroll lifecycle. It kicks off with Step 1, creating employee master data in the HR system. Then, Step 2, we capture attendance recording. And listen, upgrading from manual sign-in logs to biometric scanners here, that's a real game changer for capturing accurate data and preventing buddy punching. From there, Step 3, the system runs the pay calculation based on that captured data, which is finally sent to Step 4, review and approval by an authorized person. Once it's approved, we hit Step 5, payment processing, where funds actually transfer to the employees' bank accounts. But happening right alongside that is Step 6, which is absolutely critical, statutory compliance. Think about it. If you calculate and deduct taxes like TDS, Provident Funds, or ESI, but then fail to deposit them correctly with the government, the legal backlash is going to be severe. Finally, the process is tied off with Step 7, generating reporting, and Step 8, strict record retention for future auditing. Section 3. Audit procedures and focus. 5. Audit procedures. When an auditor actually hits the field, they start by really understanding the process and the policies. Then the heavy lifting begins, verifying master data and rigorously testing new hires and exits. Now, a really great quick win here is reconciling the headcount. If HR says you have 100 employees, but the payroll register is paying 105, matching that headcount instantly catches the discrepancy. You're also going to spend a considerable amount of time verifying attendance and leave records. The fieldwork then moves into manual verifications. By literally recalculating salaries, allowances, and overtime yourself, you act as a vital double check against hidden logic errors within the system. You absolutely must verify statutory deductions too, your TDS, PF, ESI, and professional tax. Rounding out the procedure involves reconciling bank payments against the register, reviewing exception reports or manual overrides to understand exactly why someone bypassed the standard system, and finally, ensuring the timely filing of all statutory dues. 6. Areas to focus. While you're running those procedures, you have to keep your focus sharp on specific targets. Master data accuracy and the proper authorization of any payroll changes are your top priorities.
You also need to rigorously verify the accuracy of pay rates and overtime. A practical scenario? Cross-referencing claimed overtime against actual facility access logs. That's a fantastic way to prevent massive payroll bloat. Deductions, tax calculations, and absolute compliance with labor laws also demand heavy, heavy scrutiny. Your focus also needs to cover the payroll period end closing process and, crucially, access controls and segregation of duties. Just think about it. If the exact same person calculating the pay also holds the authority to approve the final bank transfer, that creates an absolutely massive fraud risk. Finally, whatever you do, don't overlook data privacy, bank reconciliations, and ensuring robust reporting and record retention.
Section 4. Example payroll transaction. 7. Example payroll transaction. Let's anchor all this theory with a concrete transaction. We're looking at an employee, Rohan Sharma, ID EMP 1024, in the finance department. His basic pay is 50,000 rupees. Add in allowances of 10,000 rupees, and we get a gross pay of 60,000. Now, the audit check ensures those 8,000 rupees in deductions are perfectly accurate, which ultimately leads to a verified net pay transfer of 52,000 rupees directly to his bank account.
Section 5. Red flags and impact. 8 common red flags. When you're digging through the system, you need to be on high alert for warning signs. This includes payments made to inactive or resigned employees, duplicate records, or completely unauthorized changes. You're also hunting for unusually high overtime, frequent manual overrides, bad deductions, or delayed statutory payments. And practically speaking, if you stumble across an employee with a negative leave balance, that clearly indicates a major failure in your attendance tracking or HR policy enforcement. Oh, and incomplete documentation is always a glaring red flag. 9. Impact of effective payroll audit. So why go to all this trouble? Well, the impact of a pristine payroll audit is immense. It guarantees accurate payments and strict law compliance, which proactively avoids penalties and protects the organization's bottom line. It heavily reduces fraud risk, strengthens internal governance, and ensures reliable reporting. But maybe most importantly, it improves employee trust. Because let's be real, absolutely nothing ruins morale faster than a messed up paycheck. Section 6. The key takeaway. 10. Key takeaway. This next thought perfectly encapsulates our entire mission today. Read it with me. A strong payroll process with effective controls and regular audits ensures that the right employee receives the right pay with the right deductions at the right time in compliance with all applicable laws and policies. That specific rhythm, the right employee, the right pay, the right deductions at the right time, that is the absolute mantra of a successful auditor. And this brilliantly illustrates our final concept, the ultimate formula for success. Effective payroll audit equals accurate payments, plus compliance, plus data security, plus employee trust, plus strong controls. As you consider this formula, I want to leave you with one final thought. Is your organization actively upholding all 5 of these pillars to guarantee absolute integrity? I truly hope this explainer has equipped you with the exact knowledge to answer that question. Thank you for joining me, Sama Herakli, for this deep dive. Keep auditing, stay focused, and I will see you next time.